Hello, my name is Phil Doran, and along with my partner Sean Wheeler, we run this company, Freight Training. Thank you for opening this presentation. For the South African involved in export trade, a fairly important piece of legislation arises where the South African company must act as a tax gatherer, a mandate forwarded to the vendor in terms of the VAT Act, being Act 89 of 1991. Accordingly, we run a short course which deals with this subject in a hands-on manner. It runs for 4 hours, and although we are fairly confident that the course itself addresses the most frequently asked questions, there is also ample opportunity for the delegate to raise further questions on the subject on the day. The course material is provided in an electronic format, and as well as including a copy of the presentation used, the delegate also receives copies of the Export Incentive Scheme, being the legislation that applies when the export must be standard rated. Well, much of this legislation relates to the foreign buyer, explaining under what circumstances they may or may not recover the VAT. Also included is the interpretation note, dealing with the documents and timescales, both of which are crucial issues in compliance, applicable when the supply is zero rated. Although exchange control is not a VAT issue, we also cover this subject on the course, and the material on the course disc includes a copy of the SAD manual regarding exchange control declarations to support this. The course costs also include a copy of our trade publication, as well as one of our wall charts on the subject of export VAT. Now, I'll take you through some of the topics, but bear in mind that the course runs for 4 hours, and the following are the broad strokes. There is a preferential rate of VAT applicable to an export. This is to say that VAT will always apply to every export, unless of course it is one of the very few exempt items, and what the course helps determine really is what rate of VAT should be applied. Well, this very much depends on whether or not it is an export from the vendor's point of view. You see, the delegate must end up understanding as a vendor what is meant by an export. For example, consider what a seller means by an export, most likely that his buyer is in a foreign country. Yet the beneficiary sees the export because they have a bank instrument to secure payment. The shipper sees the transaction as being an export as they have an airwaybill or bill of lading, whereas the insured has a contract with a marine underwriter and perhaps takes this as evidence of the concept of an export. The exporter has a document evidencing an export interface with customs, and the resident has received or plans to receive a foreign payment, that is to say a payment from a non-resident source. So, what of the vendor? What evidences the concept of an export for them? Remember, law brings certainty to this issue, so we can be absolutely certain as to what constitutes an export for the vendor. But with this law comes responsibility. What happens if the vendor fails to correctly apply the rules? And what are the rules anyway? So, there is a preferential rate of tax, and it is document driven. The course deals with these documents and the time scale of performance. Everything is time sensitive in respect of VAT, the timing of export, the timing of invoicing, the timing of payment. Failing this preference, the standard rate of VAT applies. But there is an exception for certain sea and air freight exports, an exception that we need to explore, which allows the vendor to choose to apply either the standard rate or the preferential zero rate. Well, this preferential rate is also document driven and is also time sensitive. We need to cover this requirement in great detail. We also address some of the exceptions, such as those exports where the standard rate applies and yet it may not be recovered by the buyer. So really, the course is about uncovering which position the vendor falls into and what they need to achieve to be compliant in any of several possible situations. Now, the way we uncover the vendor's position is to explore the various contracts they may enter into as a seller. We see how this translates into their position as a vendor. As mentioned, although exchange control is a different subject entirely, we also address exchange control reporting and monitoring within the course, as it's an equally crucial law applicable to the export environment and one where compliance is also vital. Non-compliance is discussed along with the calculation of penalties. It isn't a nice topic, but the vendor needs to appreciate the substantial risks they face if they do not comply with the rules. So, what is addressed in detail is hard to summarize briefly, but we can assure you that in a 4-hour course the delegate tackles their VAT position for both indirect exports and their VAT and documentary position for direct exports, as well as taking a look at the balance of payment or BOP reporting in light of the ongoing changes to exchange control monitoring. Importantly, we also look at variations in exports, consignment stock or the sale of goods at sea, drop shipments and merchanting transactions. We also look at the VAT position arising from the use of an import bond store for export traffic. The bulk of the time, however, is spent looking at the documents needed to support the VAT position. The documents needed for compliance when zero rating, and how these documents differ from road to rail, from sea to air, as well as looking at how the vendor using their own transport is affected by this legislation. The material also addresses common areas of misunderstanding, such as how best to deal with the VAT liability which may arise from a prepayment, or the role of the exporter's commercial invoice in comparison to that of the vendor's tax invoice. Now, when the SA vendor is involved in a particular type of indirect export, there is a certain exception where, as mentioned earlier, the vendor may elect to zero rate a supply, but purely at the vendor's risk. We look into the detail of this option, at its application, its opportunity, and at its risk. And, as always, at the documents and timescales which may arise when this risk is taken. And the risks are many, given also that the time frame for performance in this type of export is much tighter too, and compliant documentation differs in this regard as opposed to a direct export. As stated, even with direct exports, the type of transport used has a bearing on the documents which need to be retained. Helpfully, the course costs also include a laminated and encapsulated copy of our wall chart on the subject, so the delegate is left with a handy summary to work from on their return to the office. The course runs for 4 hours, and we're confident that the delegate by the end will have a sufficient grasp of the rules to ensure compliance. Thanks for listening to this overview of the course we run on the SA VAT Act and exporting. If you wish to book, you may do so via the website. Simply follow the links to the booking form. Once completed, we will automatically begin the booking process. If you're interested in any of our other courses or ancillary material, you'll find further text and spoken information on the site, or you may wish to mail us if you cannot locate your specific need. Again, we thank you for your time and for thinking of us, and we look forward to seeing you on a course with us soon.